in to the Cash Flow Show with Dave and Nate, the best place to navigate how to achieve capital appreciation with commercial acquisitions. Here's your hosts, Dave Seymour and Nathan Amaral.
Oh man, you can't help yourself, can you?
No, what happened to the new video? You had a new video.
Wait, it's coming. I know. Next week.
What do you mean next week? I could play it right now from my computer.
No, but if you play it now, then you're gonna get like copy struck. You know, you're gonna have like, what do they call those? Copyright infringements and all that. No, next week, because I'll tell you what, Dave, I was a little bit behind this week. I was with my parents most of the week. They were visiting on the island, and I spent a boatload of time with them. And it's like the final touches and to get it in and to put it on,
Right.
Let me just fire the production manager right now. Mike, you're fired.
Wow. What did Mike do? Take your hat off. Show him how bad your hair is.
No, I can't. It's so
it.
bad.
Go on, do it.
It's so bad. It's like, look at this.
Oh my God, you look like a regular human being.
Oh, it's so bad.
I got a high and tight haircut once. Bennett was maybe,
Yeah.
I don't know, 4. So I go home. I says to him, like high and tight, like a buzz cut.
Yeah.
So Bennett says to me, I said to Bennett, do you like my haircut? He goes, no, Dad. I go, why? He goes, why'd you cut all those bits out up there as well? So I punched him. You can't talk to me like that.
Punch him in the throat, yeah.
every time they say nice things, I punch them. Make sure they don't grow up to be sensitive, caring, loving men. You know what I mean? You gotta
Exactly.
get that out of them early.
Exactly.
I'm joking. Right. Do the thing, man.
Do the thing. All right.
Yeah, we're late. There's probably nobody there.
We are a little late. No, that's not true. I can prove you wrong.
By the way, using your parents as an excuse for underperforming is not acceptable. All right.
Well,
I can better than that.
I know it's true. It's true. But I wanted to get one last sit down, cafe meeting with them before we left. So, but listen, I can prove you wrong that there's people here. I hope I can prove you wrong. Everybody who's watching right now, make sure you put some hellos in the comments. Welcome to the Cash Flow Show. We are your hosts, Dave Seymour and Nathan Amaral. This is the best place, the only place. I don't know if you guys knew that. It's the only place online to learn about how to get into commercial acquisitions and how you can what do they call that word? Expound? No.
Expand?
Expatiate?
Expansionation.
I'm making it up. You can expand your portfolio. Exfoliate.
No, that's when you squeeze blackheads. That's something totally different.
Oh, geez. Whatever it is. But anyway,
Accelerate.
Accelerate. Yeah. If you want to accelerate your portfolio, accelerate your wealth, this is the best place to be. If you're new to the show, put a comment below so I can prove Dave wrong that there is people here. Or if you've been here before, let us know in the comment section below. I told you somebody was here.
There you go. Chai, what's up, man? Down in Florida. How are you, brother?
Oh, Florida.
Oh, good.
Oh, man. By the way, didn't you just come back from Florida? No, you're going to Florida.
No, we didn't. We were going to be in Florida this weekend. That's correct. We had about 50 registered investors to come to Bascom's Chop House.
Yeah.
In Fort Myers.
Okay.
And then Mother Nature kind of kicked us in the teeth a little bit and said, no. So, yeah, what we did was I connected with Kevin Harrington, Shark Tank. He's part of our team, as you know. Mm-hmm. And we just punted. So we're going to be going out I think we're going out in January. We're going to get through the holiday season.
Yeah.
And we're thinking we'll probably have about 150. So you can go to freedomventure.com, which is on the wall behind me. I know you can't see all of it, but we.
I just noticed that. No, I'm kidding. I'm kidding.
Hold on a minute.
Yeah.
There you go. I'm back. You missed me. No, but seriously, go to freedomventure.com and it's a generic site there. If you click on live events, it's an opportunity to just punch in your information. And then what we'll do is we'll notify you where and when the next events are. And then you decide, whether it fits your time schedule or not. So we've kind of got it as a open door policy. We had our event a couple of weeks ago, as I think we talked about last week.
Yeah.
And that was exceptional. That was exceptional.
And I'll probably be at the one in Florida. I'll be there in January as well, so that would be cool. I'll get over there.
Oh, cool, good.
That'd be awesome.
Good, mate. We'll have you participate.
Oh, that would be great. That'd be fantastic. I just want to say a quick hello to. We got a lot of people represented in the comments. Let's go. It's time to represent. We have Tom from New Jersey. We got Trent. Hey, Trent, longtime buddy from Texas, and we got Chaya over from Florida. So that's who else is representing where you're from. Dave, where are you?
I'm in Boston.
Somewhere in Boston. I'm in the middle of the Atlantic, so y'all can't find me.
No, you're hiding in the Azores. And that's the other thing too.
What?
How can you blame your parents for slowing you down when you're on a tiny little island?
No,
absolutely. There's no traffic.
No, you're right. There is no traffic, but I just wanted, you know how it is. You just want to just spend a little bit more time. Your parents are abroad, right? If I recall correctly.
My mom passed.
Your mom passed.
My father is back in England. Yes.
Yeah.
They're in lockdown.
They're in lockdown. Oh, that's right. A whole month.
So they did it by color. There's yellow. No, it goes green.
Okay.
Yellow and screwed. Those are the three levels of COVID. Yeah.
Oh
Green's
my god.
Okay.
Oh god.
Watch out.
That's funny.
The other one is screwed. Look, Adam says your hair looks fine.
No, your hair will be fine by January. No, it needs to be fine. It needs to be fine like by now. It's too long. I just get preoccupied with other things in life. So
I got it, buddy. I got it.
I need to work on my personal hygiene. As you can tell.
It's not easy being this beautiful every day.
It's not easy, no.
It takes a lot of work.
Yeah, it takes a lot of work. I know you spend a good hour every day at the spa.
You know what's funny? I went and got a haircut the other day, right?
Yeah.
This is crazy. They've got a butcher's. It's not a butcher's
No.
shop. It's a barber shop right
Yeah.
here in the square.
Yeah.
And there's about 5 or 6 guys that work in there. And there's a reality TV show sitting right in this barber shop.
Okay.
Like they're all young guns, big beards, tattoos.
Yeah.
You know, they're breaking each other's stones while they don't pay no attention to the clients. They just break each other's stones the whole time they're in there. You know, talking about their girlfriends and stuff.
Right.
It's hilarious. So the kid says to me, you know, what can I do for you? How do you want your haircut? I said, dude, I don't give a crap what you do. I say, just cut it. I put $1 per crap on it. I will never go in the morning. That's my routine. You know what I mean?
Yeah.
So I'm not there going,
I used to.
It cost me $30. You know how much Mary Beth spends?
What?
Mary Beth spends north of $100 to get her hair done.
Wow. Yeah, but women have always been more expensive when it comes to hair anyway. But that's expensive.
Hold on a minute. Well, that's actually a good point because it's not only hair. Yeah, no. They're expensive when it comes to hair.
We'll just leave it at that.
Yeah. Go down the road there. That's funny. Yeah, so anyway.
Oh,
what are we talking about haircuts for? This is the cash flow.
Well, it is the cash flow show, and it's actually a special show today because we have prizes to give away. I'm really excited about this because, well, one, I like prizes. Those are so cool. Are you going to show them? Okay, right there. Those are
backwards.
Those are really cool. I really like those.
These are the real deal.
Do you have a schmedium? Do you have a schmedium there?
I have everything you need right here in your hand.
Oh, that is awesome.
This is a large extra. See, I went for the big bucks. These are Flex Fit.
Oh, I like Flex Fit, but Dave, honestly, I don't want a hat unless you're autographing it.
Dude, that's a great idea. I could autograph the inside of the hat.
You have to autograph it. I mean, you're like, you know what? I literally walked into my living room the other day. Guess what my son was watching? Flipping Boston. Come on, man.
He's smart.
He's smart. You know?
He's a fart smeller. A smart fella.
So
all that in a bag of chips.
So we got prizes we're gonna give away. We'll share all those details here in just a second. We'll not break the news there too early, but we also have a new deal that we're gonna talk about.
Yeah. Did you get that? Did I send that to you in the email?
Yeah, I got it. I got it here. Yeah. But before we jump into that, I mean, I don't know. What do you think? Should we talk about current state of affairs of the news?
Yeah, I did. Yeah,
because a lot of people are wondering. People are wondering like what's going to happen, and I know we don't have answers for that. But I mean, what if it goes? What if it goes one way? What if it goes the other way? Right?
Look, whether you're red or blue, the cards are on the table, right?
I'm only wearing a blue shirt neutral. Today. Yeah, I'm neutral.
Right?
Yeah,
we're neutral. So it looks like it's going to be a Democratic. It's going to be a Democratic pregnancy. Pregnancy. Presidency.
Presidency.
Oh, my Lord. Yeah, it's not a pregnancy. So, here's what's interesting. There is a runoff in the great state of Georgia.
Okay.
And that runoff will be for control of the Senate.
Yeah, that's going to be huge.
And as long as the Democratic Party does not take over both the House and the Senate and the White House, then there will be a lot of challenges and difficulties in passing a lot of the
bills
campaign promise changes that went out there. Okay.
Yeah.
And they do affect us. I have been doing a deep dive this week on the impact of a Biden presidency around 1031 exchanges.
Yeah.
And what that looks like, and it was interesting. I did a webinar this week with the guys over at the New England Real Estate Journal and the New Jersey Real Estate Journal, a gentleman by the name of Rick Kaplan. Kevin came on, myself, my CIO, Walter, and we got into some pretty good topics there. And one was, there was a lady on there. I'm actually bringing her on the radio show this week. Just got to meet her this week, but she's been a facilitator of 1031 exchanges for a very long time.
Okay.
And what's happening is I have investor clients who want to come into the fund. They want a 1031 exchange into the fund. They want to protect their tax exposure on sale of an asset.
Yeah.
Because think about it. Right now, we're at the top of the market in assets. These are investors who are owning, 15, 20, 30 unit complexes, whatever, some commercial, some office type stuff, some mixed use, and they're at the best point to sell.
Yeah.
So when you sell, you want to roll that over. You want to roll it into a tax deferred situation. And it's not easy to find great deals right now to 1031 exchange into, number one. And then number two, to be passive, right? They don't want to do the work anymore. They don't want to be a landlord.
Yeah.
So, we tick all those boxes. At Freedom Venture, our fund is a passive investment. It's in real estate, but it gets kind of interesting because the challenge is this. A 1031 exchange is designed to be like to like, real estate to real estate, right?
Yeah.
And in essence, what we have is not real estate that you can leverage, gains against, because you're buying units of the fund or shares in a company, and the company owns the real estate. Okay.
Yep.
I don't want to go too crazy with it, but it's interesting because if you have some tenacity and you dive deep enough, you can find the experts that know how to work around this. And it's a Delaware trust. There's a certain kind of trust that comes out of the state of do you know what it is?
Yeah, the Dynasty Trust?
No, not a Dynasty Trust. It's a different one altogether.
Okay.
It's a different one altogether. It's a Delaware trust that allows investors to park their gains on an asset, and then it's allowed to go in and out of the fund. So it's kind of interesting. The reason I'm bringing it up is the fact that we are looking at some pretty substantial impacts,
okay.
With the Biden, with the Biden tax proposals.
Okay.
I tell you what, I don't know what you feel about this, Nate, but I've been talking to some pretty high-level investors this week, and we're finding kind of like a common thread in our research and discussion, and it's this. Ready?
Yeah.
I'm going to tax the wealthy.
Yeah.
Everybody who owns over $400,000 a year, I'm going to tax them.
Right.
We're going to go after all those mean, money-grabbing corporations. We're going to get those buggers, right? And then we're going to get these people and these people. you know, and the majority of the people who, you know, listen to a different message from President Trump, right? Kind of like the opposite, you know. So it's a great campaign promise. It's a great campaign slogan, for want of a better term. And the conversations I've been having is this: yeah, it's great to run on a certain, you know, platform, but it ain't always easy to execute on it.
Very true.
And that's the challenge. So,
you know what sounds so appealing, though, which a lot of people don't realize, and I'll share some perspective on this. I've been living in a socialistic country, Portugal, for over a year. I just had my 1-year anniversary here. So what people don't realize, if you do have free education and you have free health care and free this and free that, at the end of the day, I think everybody here listening knows nothing is actually for free. It's going to come out somewhere, and it ends up coming out of taxes. And the reality is, the higher the taxes go, who do you want controlling the money? Do you want the bureaucrats controlling the money, or do you want to put the people in power and have them control more of the money? That's really, I mean, when it comes to the tax argument, that's really what it comes down to.
No, I'm with you 100%. That, you know, Reagan had trickle-down economics, right? Take care of the corporations, because the corporations can take care of, you know, take care of the people. And you know, whether you believe that philosophy or not, you know, it just is what it is. But I don't know, man. I looked at what was going on around us, and I just thought to myself, you know, I'm not believing and feeling that the federal government is going to move at a rate of speed to impact me,
That's
right?
very true.
And my business model and my investors,
right?
Too dramatically in the next year and a half, right? Then the other side of the equation, which I thought was pretty interesting too, was this, and it was, if I'm going to get hurt or I'm going to pay more in taxes if I accept that, well, guess what? I have control over my income. So if I need to raise my income to offset my taxes, then I raise my income. That's the beauty and the power of real estate. It's the beauty and power of entrepreneurship. Instead of saying somebody else is in control of my financial future, the government, the job, the man, the whatever, right? We just go the other way, and we start talking about the fact of, hey, look, I'm just going to increase my output, right, to offset. So, you know, I don't toss and turn at night worrying about it. I mean, I pulled up an article from CNBC, right? And the big part of this article is the fact of, if we get a 50-50 split, then the deciding vote goes to the vice president-elect, okay? So, you know, Vice President-elect Kamala Harris will have that deciding vote on anything that's trying to get through the Senate. And, you know, she was from the great place of San Francisco. And, you know, look, I'm not gonna tear anybody down to build us up. But at the end of the day, you know, that runoff in Georgia is going to be very, very important. It's going to be important. And again, even if the Georgia Senate race goes in the favor of the Democrats and the White House and the House, I still know it takes time to implement this.
That's
stuff.
very true.
You know,
it doesn't happen overnight.
Right. Think about how long it took for them to even figure out a PPP plan and a stimulus package, and you know, and that was life saving.
Right.
And here's the other one. Every tax incentive that was ever created was created by politicians. And I promise you that those tax incentives benefited politicians as well.
True.
You know, I don't think any of us are under the impression that they work purely from a place of being a civil servant to serve. You know, look at their primary residences. Look at their, you know,
business deals on the side.
They're all business owners. And, you know,
lawyers and business owners.
Right. Couple of things that I did see in the Biden plan that were interesting is a temporary expansion of the child care tax credit, right? So raising that to $3,000. $3,000 for children under 17.
Okay.
And then a little bonus for children under the age of $600. That's been bipartisan supported in the past.
Okay.
But when you start looking at corporate tax rates being jumped from 21 to 28%, that's substantial. And here's the thing. I had this conversation with Walter today, our CIO, and look at me, I'm all in taxes now.
Yeah.
Our CIO, Walter, he said, look, man, here's the way it works. It hurts everybody.
Yeah.
Because if I'm a business and my taxes go from 21 to 28%, guess what? So does the cost of my goods and services.
Exactly.
And who pays for the goods and services? The average customer. American.
Yeah.
Right, the average American. So, the middle earning American gets absolutely jacked up once again.
Yeah.
So I don't know that there's a silver lining or a strategy that circumvents the challenges it brings. It just is, man.
Yeah.
It's where we live. It's where we live. And if you go to usdebtclock.org right now,
we've been there. Yeah,
you'll get to see what a great job, what a fantastic job they're doing with all of our tax dollars, right? And all of the additional, printed, funny money. One guy referred to it this week that's going into the marketplace. So, anyway, that's the lay of the land. On the real estate side, get ready. Here we go. Oh, that's depressing, Nathan.
Sorry.
That's depressing.
I know, but it's reality, right? At the end of the day.
Yeah, you gotta zoom in on it a little bit.
All right. Where are we going?
U.S. federal tax revenue, right? Start at that number at the top in the green box, all the way to the top, right? So 3.4 trillion.
Yep.
And one might say, hey, that's a pretty healthy income. And I scroll over to I'm looking at it on the left, U.S. federal spending official, right? Right underneath U.S. national debt, the box underneath that says 6.635 trillion official. Actual is 7.735. It's the one that's underneath it.
Yeah.
So you've got a $4 trillion or 3.1 trillion, depending on which number you rely on, deficit. That's how well they're doing with our tax dollars. So look, that they've at least got to attempt, right, to shrink that gap.
Yeah.
How are they going to do it? Taxes. That's how they're going to do it. They don't.
That's right.
They got no other way of creating income, right?
Yeah.
So we're dealing with this tax strategy that's on the books. Can we get the GDP up so that people are earning more, stimulating the economy, reducing the deficit, taking care of healthcare without it being a financial burden on Americans? A lot going on, man. A lot going on.
It's true.
But it always boils down to, what do I have control over and what do I not?
Yeah,
right?
and it also, this could worry a lot of people, right? And people are, a lot of people come from a place of like, okay, which direction should I go in, right? Is the stock market going to go down? Is it going to go up?
Yeah.
And what's the future going to look like? But again, I think, like we said, even our previous episodes, at the end of the day, you want something that's secure, that's long-term. You don't want anything quick fix. You got to get into something that is as solid as a piece of a building, right? As solid as a building.
Growth.
Yeah, growth.
Yeah.
Exactly. And that's really important. And that's exactly, can we talk about, I'm really excited about this deal of the week. Can we talk about that?
Did you see it?
I did.
It's such a cutie, isn't it?
It is.
Pull it up.
I got it.
Up.
Yeah.
It's
I like
a cracker.
it.
This is a cracker. So this one has gone through the walkthrough. It's gone through underwriting. The letter of intent has been submitted and accepted. So this deal is, it's ahead of the pack with regard to some of the other deals that we've walked through on these calls each week. So let me tell you about it. We have a buy box, right? Our buy box is 20 to 140 units. And the line is, we don't deviate. Well, guess what? There's an exception to every rule.
What was the exception of this one? Yeah.
Well, this is because of its location. It's ridiculous,
All
right? Only 8 units. It's waterfront. It's a waterfront 8-unit, pretty much like a condo complex. That's how it was. That's how it was structured. So I'll read through it because it really is quite insightful. So it's located in the Tampa Bay neighborhoods, 3-minute walk to St. Pete. It's on what's called the 4th Street corridor, which is very elite.
This is a very nice. I like St. Pete. Been there multiple times. I like this area a lot.
Yeah. Tampa Bay neighborhoods, 3-minute walk, like I said. It's one building, so one roof. It's a single 2-story building containing 8 one-bedroom apartments built in 86. Now, the property went through extensive structural mechanical renovations in 19. So all of its Tampa hurricane code and windows, etc., that's all taken care of. Roof, hurricane ties, all the stuff that we need to deal with on the construction side. In 19, it also included interior improvements, such as some complete kitchen and bath remodels. Now, you look at that and you say, well, where's the reposition, right? You must be paying top dollar. Well, it gets interesting, right? So it was originally built as a complex, like I said, condominiums. During the 2008 market correction, one resident purchased all the units over time. By 2010, he'd acquired all of them and was operating the complex as a seasonal and vacation rental. So this was a, like, I'll give this 30% of my attention type deal for this particular owner. The other 70% of his time, he was living his life out of state, right?
Okay.
So he self-managed the property until he passed away in 18. His family divided up the properties amongst themselves, hired a contractor to complete much-needed renovations that were due since 2019. Now, what's interesting is the property's been unoccupied, other than the occasional visit from family members.
Wow.
Right?
Wow.
Unoccupied, no tenants, nothing.
Wow.
Due to some external issues, the family has now decided to sell. So everybody's looking at it saying, I don't want to put any work in, don't want to deal with tenants, let's sell it. They reached out to our team, they know we're the buyers of these kinds of assets. So the numbers on this are dynamite, man. It's a nice little acquisition at $990,000, 50,000, 45, 50,000 in improvements, particularly landscaping, curb appeal, some exterior stuff that we need to address. Absolutely no heavy lifting on this property at all.
Okay.
Because the improvements will be complete in less than a month. We have every belief that this will be fully tenanted and up and running within 90 days.
Nice.
So that's a very aggressive turnaround. Again, the feasibility study shows that people want what we have. We just got to give it to them.
Yeah.
So the cash on cash return on this one, year one targeted out, is 12.82%. We work it, we love it, massage it, just keep the asset working.
Yeah.
Year 5, we anticipate targeted returns at 15.7 to our investors. And then again, that number, that internal rate of return, the value of our investors' capital working in this deal over the life of the acquisition to its point of dissolution or sale, 5, maybe 6 years, is 21.62%. And then the equity multiple, and we talk about this every week, 2.37. So for my investors, every $1 that you put in on this particular asset, right, the way it would work out is that we target a return of your equity, your $1, plus another $1.37. So it's a $1.37 plus the original dollar that you put in there. So if it's 100,000, do the math, okay? So more than doubling your capital is the targeted return over the life of this little asset. She's sweet.
She is sweet. I got a question for you.
Really is.
I got a question for you. This actually came up in a previous conversation I had earlier in the week because we were discussing Florida and me and this investor. So, there's a lot of like flooding going on right now. We got flooding in Charlotte. We got flooding in the South. So what would happen in a situation if there was a flood at, let's say, this particular complex? What would take place? Like, how does that work for the investors? How does that work in your team? What happens then?
Yeah, no, great question. So look, everything in our business, whether it's not one of our 90-unit, acquisitions or whether it's an 8-unit acquisition, the process is still the same. So our management company is a company by the name of Anton Management Agency. They have 1.5 million square feet of assets already under management. So if it's a flood, obviously there's insurance for all of these things. And then it's a case of just allocating tenants to safety, safety first, go in and repair. I mean, it doesn't...
That's really nice. So the team... Nobody
wants to have... Go ahead.
You're saying the team would actually help relocate the tenants that are in the property.
Do whatever you got to do to take care of your tenants. Absolutely.
That's awesome.
Absolutely. People, Nathan, ready? People first, profit second. Right? That's just good business.
Yeah.
We're in the people business. It just so happens that our product is sticks and bricks. So that's how we look at all of these properties. but yeah, reallocate if you need to. Move a tenant, put them in a safe place.
Nice.
Go in, file the claim, do everything that you got to do. I mean, that's insurance. That's why we have it on every property.
Nice.
Yeah, great question though.
Good,
sure.
good. And by the way, if anybody else has any questions about this deal or any other deals, you can comment at any time, or any questions that maybe like Dave is going over, feel free to just throw those in the comment section below as well.
Sure.
All right.
I was on a call yesterday, and I think it's important to throw this out there because I always, I like it. I like to be, I like to be kind of like under the gun, right? So we were talking with a potential investor about, preferred returns, and then sharing in profits over a certain number, et cetera, et cetera. So I'm going to put this out there. Our fund is structured in a way that allows for the investor to always be in a position to take the biggest piece of the pie, if you will.
Okay.
So when we look at those targeted quarterly distributions, cash on cash returns, those targeted returns include sharing in the cash flow with the fund managers, right? Sharing in the cash flow with the company. And the way it works is this: the very first 6% of all cash flow profit goes to the investors. That's called the preferred return. It's a pref 6, they call it. Now, anything after that, so let's say, one quarter, there's an 8%, cash flow profit gain. Well, that 2% over the 6, that then goes into a 75-25 split with the fund managers. So the investors in that example would get 7.75, cash on cash return.
Right.
And the management company would get a 0.25, or we call it 25 bips on the rest of that cash flow.
Right.
So it's interesting because I learned in business, it's a really good idea, not to count somebody else's money. Are you happy with what you're getting? And if you are, do the deal. And if you're not, guess what? Don't do the deal.
Yeah.
It's okay. And then we got into a conversation, and it was a great conversation, and I have a ton of respect for the gentleman that was on that call with us. But it's basically this: when an investor invests in a fund like ours, or you invest in a syndicated deal, or you invest cash as an investor in even in a single family buy, fix, and flip, right? What are you really doing? You're buying somebody else's expertise. You're buying our time, our energy. Walter, 36 years of experience. Me, I've got well over a decade. 12, 13 years of experience. You pay for somebody else's expertise.
Right.
And if you think you're paying too much for it, then go shop around.
Right. Yeah, but the reality is like, again, we've talked about this so many times. It's about that trust factor, right? And also there's you forgot to mention Kevin Harrington's advisory. But it's at the end of the day, it's like if you want to be in a position where maybe you have the funds, but you don't know exactly where to do it. You're not out to like, hey, I want to go hunt the deal myself, or I don't want to manage a property management team and all that stuff. Or what if there is a flood? What do I do? That's where the opportunity of leveraging Freedom Ventures comes in, right? It just comes into where the team, they can rest assured that their money is secure and that, hey, everything's going to get taken care of, right? That's the exchange. That's the exchange.
Look, man, there are a lot of experts out there. When I use the term expert, I use it in the term of, hey, I know how to do it, right? I know how to do it. I've even done it before from an investor standpoint. I know how to analyze the numbers. I know what the risk aversion is. I know the marketplace. I can pull the MSA data. I know what the price per square foot for construction should be in this zip code. Dude, you're a rock star. You know everything, right?
Yeah.
Well, how many of those deals have you actually done yourself?
Right.
How many properties have you walked?
Yeah.
How many contractors have you balled out when you needed to?
Yeah.
How many tenants have you stood in court next to because you had to go through an eviction process because they hadn't paid their rent for 6 months?
So true.
Ask me how I know what that feels like.
Exactly.
Right?
Exactly.
So it's okay to know it all. I want my investors to be highly educated, competent, and proficient in what we do. But don't tell me, right? Don't tell me until you're in the trenches with us.
Yeah.
40, 60, 80 hours a week.
Right. Well, there's a difference.
Anyway, look, I love everybody.
Well, there's a good difference too. Like it's the whole, I hate to use this word, but it's kind of like a label. There's the whole broker, right? There's the broker who just maybe sits in an office and has a suit on and they're there to sell you whatever they got in their portfolio. And then there's the actual people who are in the trenches doing the business. And that's where you want to be. You want to be with people who are actually going through it and having that experience.
You know what's interesting? Check this one out, right? So a comment was made at some point, I don't remember when. And the comment was, raising the capital is the harder part. Managing the fund is the easier part. And I thought about that for a second. And I agree with it. But here's why I agree with it. Managing the fund requires decades and decades of proven systems, processes, and experience in the trenches to manage the fund proficiently, right?
True.
To know which deals to bring in, which deals to pass.
Take out,
Remember we talked about the deal that we were going to bring in that was an assumption. It was 107 doors.
Yeah.
It was an assumable loan. You could walk into that property for $40,000.
I remember that one, because I was even curious. I was like, how did you get that deal with that little amount down?
It was a great deal until we got there.
Oh, no.
Until we walked the property. Yeah.
Oh, dang.
And that's fine.
Yeah.
We have accepted. It's all part of our due diligence.
Yeah.
Then when we got there, it just had way too many tenant, location, and property challenges. Once we readjusted our spreadsheet and our buy box and our analysis on it, it made no sense. Some deals you can give them to me for free, and I'm not going to do it because of the headache and the challenges going forward.
True.
So that's the stuff, if you will, that not a lot of people see. I love this comment from Donald here. He said, a lot of people will always wonder how much other people are making. I think a lot of that comes from a place of insecurity. And I think sometimes you're going to find that people just they want to feel valued for their opinion. And I genuinely do. I welcome opinions. I welcome tangible experices, right? Not just what was read in a book. So
well, I also think
it's a great discussion.
I also think there's what I'd like to say the traditional method, and then there's like newer options of investing, like the fund itself. Because when you look at the old way, for example, people think 401k. It's a very old plan, but not many people realize how many fees are built into those plans for the brokers, right? At the end of the day, it's for the brokers. And then you have new, I don't call it new securities, right? Or new opportunities that are more open and transparent. And that's exactly what you're bringing to the table.
Sure. Look, man, it's I read an article from another fund manager, and he said his goal is never to have in his PPM, his private placement memorandum, which breaks everything down, is to never have a gotcha moment. Gotcha. That's where. Right? So that's why I say right out of the gate, it's a 6 and 20. It's a 6 and 25. We call it, right? It's 6% preferred. We get 25% of the upside, right? We get 2% for the acquisition price, and then we don't charge management fees. That's all part of just the regular cost of doing business. So it's, it makes sense. Is the upside potential lucrative for us as fund managers? Yeah. But let me ask you a question. Do you have what it takes to go to sleep every night knowing that you're managing $100 million of somebody else's money? Okay? That's a pretty powerful question to ask. And if you don't have the skill set, the experience, and the ability to do that, then go get that skill set, and then you can do what we do, right? So, it's always, and look, man, if you compare it alongside, your retirement account, your portfolio managers, et cetera, et cetera, et cetera, right? What are you really doing? You're invested in the certified financial planner.
Yeah.
He or she says, look, my experience is this, and this with these particular offerings.
Right.
I think it would be good for you, Bob, to put 20 grand into this, right?
Right.
And then every time Bob puts 20 grand in, that advisor, gets a little taste. They get to wet their beak.
Right.
And, we do the same thing.
Mm-hmm.
I think we just do it with a little more transparency than
I think a lot more transparency
structure.
Because
look, Nathan, hold on.
Yeah.
I do not sign up for bashing somebody to make me
right.
I will, however, take a look at the process and break that down a little bit,
Yeah.
I said that watch this. There are fees that can legally be hidden inside a 401k.
That's exactly what I was getting to. That's so when it comes to transparency.
I think that's a problem.
That is a problem. It's not even right. The fact that if anyone right now was to go to Google and look at hidden fees in any mutual fund or any IRA, just 401 hidden fee, 401k hidden fees, and you're going to find over 7 of them that you will never even know about. And that's not right. Where like you're saying to Donald, it's upfront, it's clear, it's to the point, it is what it is. He also has another question, which I've never heard of this. Keyman insurance plan. Do you all ever use it? Keyman insurance plan? I don't know about Keyman insurance, Donald. I never heard of it. It's funny you bring up the word insurance though, because I've been working with a couple of insurance providers this past week. One's a cool guy. His name's Mike O'Connor. He was a pitcher in the majors. He was a major league pitcher. He retired out of there, and he's in insurance. There are certain investor insurance strategies that I'm beginning to get more familiar with, whereby you can overfund a life insurance plan and actually use it as a vehicle for investing. Say you put $1 million into a life insurance plan. Well, that $1 million goes into your account, right? It's your money. However, you can draw and borrow from the insurance company's balance sheet. Yeah.
So you can borrow, say 800,000, leave 200,000 on available capital to you in the account. Let's say you borrowed 800, you could borrow it at, I think it was something ridiculous. The last guy I spoke to was like 4.5%, 5%, right? So you borrow against your own life insurance policy at 4.5%, 5%. You got to make the payments on that loan. However, you now have that capital tax-free that you can now go invest and work it in a higher yield. I highly recommend Freedom Venture Investments Real Estate Fund. I like that fund. That's a great fund, right?
Yeah.
But you work it at double digits, but you're now working the balance sheet of the insurance company without breaking down your own.
And just to make something clear, the actual term is key person. So key manager. When you said key man, initially I was thinking I don't know why, I was thinking doors to an apartment complex for some reason. But it's actually called key person insurance. And the reason why I don't know much about it, it's actually more for high level corporations, people in high C-level, that type of industry. But everything you said, Dave, about insurance policies and plans, and you can get the gains out of that for investments. Is very great option for people to explore. There are many different types of products for that, even including hybrid insurance. But that's a whole nother topic for another day. But yeah, there's definitely some good avenues there for sure. Definitely some good avenues.
It's exciting. It's exciting.
Now, Dave,
want a hat?
Yeah, I know. Before we go, we got to talk about the hat. So we got hats to give away, but we need a reason why.
All right, I've been thinking about it.
Did you been thinking about it?
I've been thinking about it. So look, we're going into that time of the year where people kind of get a little bit lazy. You know what I mean?
Oh, like Christmas. Yeah. Nobody wants to do nothing.
I'm not 100% sure, but I think, you know what we'll do? We'll narrow it down. Here's what we're going to do.
Okay.
Hopefully you have Amazon Prime. Now, if you have Amazon Prime,
I do.
On Amazon Prime Video, you can Google. You might not be able to get it because you live in a strange place.
I use a VPN.
Oh, do you?
Yeah,
I don't
yeah.
know what that means. Is that legal?
No, I just tap into another.
Russian spy?
No,
Russian
no,
hacker.
not at all. No. VPN. Everybody can get one. I'll introduce you. I'll introduce you to it.
Do you need a cream once you have it?
What?
You need
No.
a cream? I got a touch of VPN. I need some cream and a salve.
No. Basically means I can tap into Amazon Prime videos. Let's put it that way.
I'm telling Bezos. All right, now listen.
Yeah.
Go to Amazon Prime, either with your PPM or whatever the hell you got from Nathan. Uh-oh, the music's playing. Does that mean we got to go?
We're going soon, yeah. Mike's still in the room producing, so he's telling us to get off.
Shut up, Mike. You're fired. All right, you're going to go to Amazon Prime.
Yeah.
You're going to Google at the top, Google. You're going to search in the search bar for Flippin' Boston.
All right.
You're going to go to season 1.
Okay.
There were 4 episodes in season 1.
All right.
You have to watch all 4.
Oh.
I have 4 hats.
Okay.
The first 4 people that guess my favorite episode of season 1 will win a hat.
Okay, so let me just... autographed. It's got to be autographed. By the star himself. But let me repeat that. So you got... Anybody who's watching has to go to Amazon Prime, watch the 4 episodes in season 1, and guess what your favorite episode is. Is that correct?
Out of those 4. Correct.
Out of those 4. And they got to tell us next week on the show.
They got to tell us next week. And the first 4 people that punch that in next week get a hat.
Awesome. Autographed by Dave Seymour. That sounds really good. All right, everyone. Thanks so much for joining in. We'll see you next week. Take care.